Hello, mic test, mic test. So hello guys and welcome to the 178th edition of the Trading Opportunities webinar. This is Nirav and let us just start with a very quick introduction. Of course, if you are able to see everything clearly and hear me, just let me know in the live chat as well. Though I have confirmed it my end and everything seems to be working fine for now. All right. So as you guys know, we are live again with our weekly series of Trading Opportunities webinar. We cover the global markets, including Euro USD, crude oil, gold, S&P, and Bitcoin. And generally, we can conduct these webinars at 4:30 p.m. GMT. We are a little bit late today. Anyways, a little bit more about my work. You can check out if you are an intermediate to advanced trader, the book Think with the Markets available on Amazon. And for those of you who are completely new here, can check out my video course on Elliott Wave for new or what you call beginner to intermediate traders. Other than that, you can check our accuracy over the years. These track records are public and can be verified by anyone. We have all this at 50eyes.com/forecast accuracy. It does take a bit of time to load. Anyways, generally we do cover these markets as you can see here: Euro, crude oil, gold, S&P, and Bitcoin. And once I have completed a discussion of a particular market, I will ask if you guys have any doubts or questions regarding that particular discussion. If you have, you can put them in the live chat and we will take things from there. Anyways, it's taking a little bit longer than expected for these sheets to load. You can check them in your own time. In the last 168 webinars, we have captured a total of 421 trades, all discussed in front of you guys live. What happened with this 169th webinar we will discuss today. So let's first open 169th webinar and we'll see about our discussion on Euro and take things from there. Anyways, this 169 webinar was conducted on 18th of July. After that, we had a private webinar as we have last Friday result for our private Slack group members for the private discussion. So we had some discussion there and that we generally do not account for in public webinars. Anyways, so here is the discussion from Euro's last webinar and let us just see what was being said and all. So we are looking for long setup on Euro and we are assuming 1-1-2 formation and the longs are discussed above 1.1774. Do keep in mind in the private webinar which was conducted last week exclusively for our Slack group members, on 25th we had changed the count significantly. The same was also updated in our Slack group and we had turned bearish and closed our long positions. Eventually Euro also turned. So we'll discuss all that now. So now let's head to the live chart of Euro, which is over here on screen now. So as a matter of fact, we were long with our setup of going long above 1.1774, after which I discussed the bearish possibility in our private discussion. I think I can, well, we cannot show the whole webinar. I have posted that in the Slack group. So let's just very quickly have a glance at that. Around 25th July, it must be there. So here is the bearish possibility, which was discussed. And we were assuming that either one minor leg up and then down or straight down can be seen on the counter of Euro. Close remaining positions and minor loss considering the bearish possibility that the whole move is about to end. Again, minor leg up for the fifth circle was expected, but we closed everything and later on the market had reversed without giving that minor leg up or clear minor leg up. Though it has gone up, it hasn't really breached the last high. So anyways, since then we had the view that it can go further down. Maybe a minor pullback can give us another short selling opportunity. That was the take. One second. Akshat Shah, thank you for the confirmation about the audio and visuals, Joe and Akshat. All right. So now coming back to the real or live chart, what we do have is an update of the counts on the higher time frame. We are looking at the daily time frame and we are using this specific data feed. Keep in mind, if you are using a different data feed, the prices will be a little bit different. Not too much difference, but there will be a minor difference. So anyways, so far what we are seeing over here is the possibility that this market has completed a possible corrective structure. One second. In 3 legs, what I am assuming is a possible zigzag from this point of reference from the price level, roughly speaking, around 1.01738. From this point of reference, time is around 13th January. We are assuming a possible zigzag in play, and a zigzag structure will have 3 legs, and we have assumed them to be like this. A possibly complete here, B complete over here, and we are assuming that the C is most likely complete here. All right. With that being said, we can now expect a leg in the downward direction, at least a 3-wave correction. That's the minimum we expect in these scenarios. However, we do have a counter view. So H1 is suggesting that more downside can be seen here. And there's a counter view called H2, which is suggesting that we have possibly one complete here, two complete here, and then a wave one of another lower degree here. And then there is a wave two of another lower degree. Let's make the distinction between the actual count and the rough analysis we are doing with this yellow line. So wave one is complete over here, two is done, and we are looking at the nested formation. Dot one is complete again over here. Dot two is still possibly going down. So again in H2 we are expecting minor leg down before any takeoff to the upside. H1 is suggesting more bearishness, H2 is suggesting minor bearishness, and then more upside to follow. So conclusion is that both cases are suggesting that more bearishness can be seen, and as a matter of fact, we don't even need the diagonal hypothesis. It was only for short-term count. Can simply count this whole thing as complete over here. Let me just remove this for a second. Let me know, Joe, Akshat, and everyone else who is currently live in the webinar in live chat, if you are understanding whatever we are discussing here. If you have any doubts, you can just let me know in the live chat, of course. The doubts or questions should be in regard to our discussion and should follow the channel guidelines to keep that in mind. So here is the updated take of the assumption of wave 2. Could still be continuing, but if it's complete like this. And here's the update alert. All right. So now we have very much of a clear picture here. If we want to go short, we can look for scalp shorts below 1.4271 or whatever this low is at your end. Let's just call it 1.140. 1.14271 was the level actually. So anyways, roughly around or below this level, we can consider shorts. And as far as longs are considered, if this really is a nested impulse, then it's not really out of the ordinary. It's just a breakout long setup above 1.17585. So above that, we are looking for longs. Below that, we are looking for shorts. And this is how we are looking for this market, or this is how we are considering this market to show us some setups. Nothing very unique, just the main theme here is that we had a change of counts. And with that, I can say we have concluded the whole discussion. Just let me know, guys, if you have any doubts or questions. If not, just type in clear or understood and we can then move on. So here's a comment from Joe. Yes, it's clear. I was just wondering if a flat correction could be forming just after wave A instead of one. Just after wave A. Um, let me just check that. It could be the case. Yes, it could be. 1 second, one more thing here. No, it looks less likely here. Yep. It's a low probability scenario. We'll go with discount as the main theme, and the possibility you suggested is I would not consider it. It just doesn't fit a few of the rules and guidelines. Can you let us know about crude oil? Yes, yes, that's the next chart, Akshat. Hello, Raghu. Nice to see you again here. All right, with that being said, let's now head over to our next chart and see how things have progressed on the chart of crude oil since our last public discussion. So here I have the recording from our last public webinar, which was conducted on 18th of July on the counter of crude oil. Let's see what was being said and all. All right. So on the counter of crude oil, we were assuming that we are seeing a possible diagonal formation. Within a diagonal formation, we were in the wave 4 and we were assuming that wave B is either continuing or complete. And if it's complete, we can see straight leg down. If not, then we can see one move up and then down. And yes, the count has remained the same since that discussion. We actually had shorts on crude oil. We booked profits on some before this week started, and the remaining were had to be closed or were closed as a stop loss was hit. So overall, it was plus, but not everything played out as expected. I think we can even look at the trade real quick. When was that? Let me just check 1 second. So I think we closed around 28 some positions or 29th. Yeah, there it is. So booked partial profits on shorts. We'll look to add later in the coming session. And the idea was very simple. If this was the count or analysis that either the B is complete here. If it's complete, we can see straight down move. If not, this market could just head up. And based on this reasoning that it could just head up, let's just change the color to yellow. Based on this reasoning, I had closed part of the position. And it did so happen in the coming session. This was on 26th July. So in the coming week, the market did go up for wave B. And the remaining position was closed as trail was hit. So let's now look at the actual chart and take things further from there. Again, keep in mind, guys, this was the discussion from last public webinar, and do keep in mind that we conducted the last webinar privately because every last Friday's webinar is private. Anyways, so here's the take on CL. We are looking at the same count. Nothing has really changed here. We are still assuming that this market is heading lower. And as a matter of fact, you know what? Let just give me a second. And let me add some shorts here. the problem with this? All right, done. So the reasoning here is very simple. We are looking at wave 4 correction inside a zigzag, sorry, a diagonal, and that wave 4 is expected to be a zigzag here. Let's just give you a rough idea of what we are talking about here. Second, let me update this as well. One second, I'm just updating it in the private group and then we'll discuss the whole thing. Anyways, so the idea for adding shorts here is rather simple. We are assuming that we are inside a diagonal structure and we are assuming that this is third complete and we are assuming the fourth is in play. And then there will be a fifth. So here is the 1, 2 complete. Third is complete and this is the fourth we are currently inside. So we are assuming that this 4 will have A leg down, B leg up, C leg down. So here's the A leg down, B leg up, and C leg down is expected, which will complete the fourth, and then this structure can play out. So this is the whole play, and obviously the stop loss here becomes this level or whatever this high is. Quite obvious here. And let's see how it plays out. Target minimum is anything below 65.112, below 65.112, or even touching that level. After touching that level, we will look for the market to, we will look to book our positions or profits. Right, and risk to reward is a little bit more than 1:1, not that big, and it's a daily chart, so it's a swing kind of trade. Sorry, Akshat, as per the channel rules and the guidelines for comments, I'm not here to give you tips. I'm just discussing my own trade and the idea behind it. Right? Do read the guidelines again. If you are not following the guidelines, I will have to block the comment section or block you from the comment section. I mean, we are strict about these things. All right. Positions you take are a matter of your own personal interest. I'm not taking any liability for it. That's why the disclaimer was played at the beginning of the webinar. Anyways, so coming back to the discussion, this is a very straightforward analysis, a very straightforward trade. And I don't think there's anything to add here. If you have any doubts or questions on this, just quickly let me know in the comment section. Joe, Raghu, etc. etc. I mean, anybody else who is live. There are a lot of people who are live, but the comments are very low comparatively. Or if there are no doubts, just type in understood or clear in the comment section and then we will move on. Next chart will be the chart of gold. So Raghu is saying clear. That's good. Raghu, one of our private Slack group members. And of course, Joe is also one of our private Slack group members is saying clear too. All right, guys. So let's now head over to the chart of gold. And of course, before loading the live chart, I should first show you guys the discussion from our last public webinar. So here on screen, we have the discussion from last public webinar on gold. We were discussing this chart in quite detail. Yes, this is quite a detailed discussion. Anyways, it has literally played out picture perfectly. One second. As I was saying, it has played out precisely as per our discussion. Not only has the market gone up as pointed by this arrow for this expected X, it has even given the down leg. This was all discussed in this last public webinar. This is, I mean, this is better shown than said. A picture really is worth 1,000 words here. Here is the picture. It did go up, literally tested the channel, and then it went down. This has played out precisely as expected. and the play has not yet been completed. My take is, or current view is, that it can even give another leg down, which can take this market to 32, 36, and maybe even 3100. All right, now here the things do get a little bit more complex. We are not really interested in just taking the shorts here. I would like to be more precise here, and I would like to enter the shorts below 32.82 to be conservative. Of course, you can add here and then expect the things to play out as we are expecting it to be a WXY. So within a WXY correction, let's call this the point of reference. Price level is around 34.52. Date is around 14th June. We are using this data feed. So from this point of reference, we are assuming a W, X, and then Y correction. So here is the W complete. X is assumed to be complete here. And this is the Y we are expecting to come into play. Here's the problem with why we don't always have the liberty to say that it will go below X low. So it could have completed very well here. So it could just take off from here as well. So henceforth, we do have a sell setup here, but the sell setup is not 100% confirmed setup. I would like to add shorts, but only once we see a move below 3286, let's say, or 3288. So we are looking for short trades below 3288. And these are the expected target levels. Right? Otherwise, it can lead to a long play as well, but I'm not very keen on discussing the long setup here because I believe the wave Y may still have more downside remaining. So we are unclear if the Y is complete or still has remaining downside, but more or less this is the play. It's a rather simple play, to be precise. It isn't that complex actually. We just wait and watch and see if the wave Y is complete or still has more downside remaining. For the upside, as I said, we are not very keen on discussing any trade here for the very simple fact that the bearish view is still holding strong. So that's the take. And let me just discuss the short term count as well. Let's refresh this chart. Anyways, in the meantime, let me know if you guys have any questions and we'll take them. Just push them in the live chat and we'll take them very quickly before heading over to our next chart. So as a matter of fact, it is looking stronger for a wave B. That's also a problem here. So as such, no questions from Joe. I'm seeing a lot of participants here, but very little participation. Anyways, one second, let me just. So this is a short-term take, and as I said, this could be the end of the whole thing as well. It could be counted in other ways. So this could be the Y as well. Here it's a double bracket, so we call it double bracket Y, and it could just go up from here. Let's just reflect that as well. Mm-hmm. All right, that's it for our discussion on gold. Let's now head over to the next chart of S&P 500. think everything has been discussed in quite detail here. 15 minutes. Let's push refresh and let's just check what was being discussed in the last webinar first. Hello, Divide. Thank you for the confirmation here. Nice to see you back again in the live webinar. Again, one of our private Slack group members, Divide. So let's now check this discussion from last webinar on the chart of S&P's 500 and see how things have progressed since then. And we were expecting bullishness on this counter. Let's see if there was a trade setup. Yes, there was a trade setup 6320, 6320 plus. We were looking for longs 6264. What was 6264? Short setup or pullback zone? I'm not sure. So let's just a step in what we were clear on. So that was the discussion from last webinar. Let's just check the actual chart and take things further from there. Here's the chart for S&P's 500. Keep in mind the last public webinar was on 18th of July. After that, we had a private session on the last Friday, which was on 25th, I guess. Yes, 25th July. So we may have discussed new variations, etc., which I'm not discussing here because that is not a matter of public record. So anyways, let's see. Since 18th July, 18th July, 18th July. Where is 18th July? 18th. Somewhere here was a discussion. Since then, market has gone above 63.20. Where is 63.20? Here somewhere. Just call it yellow. Somewhere here. It has gone till 64.40. So this analysis has played out again a +1 for our analysis on S&P. Played out as per our analysis, although the counts have changed since that time. So we'll discuss the updated counts, but as far as the direction and the setup is considered, it has played out nicely. Anyways, here's the updated take here. 1 second. Here's the diagonal we have spotted. Fifth leg complete here. And here's the downward journey of this market. We are expecting minimum 3 legs. And let's just take the things or take the discussion from the end of the diagonal. So this is our point of reference for this discussion. Price is around 6441, 31st July 2025. We are assuming that we are going to see at least 3 legs down from here. That is the main theme for this counter. And since we are expecting 3 legs down, we are expecting them as to be called an A, B, and C. Could evolve further, but so far we have assumed 1 is complete, 2 is complete, 3 is complete over here. 1 second, let me just correct it. One second. Doesn't look like that is possible. Yep, that is possible. That is precisely possible. Does look like the fourth is continuing sideways and will be followed by one leg down. This was an issue with TradingView. I had reported it months ago that whenever I update this text, like copy and paste it, it does not reflect the change. Like, look at this. And since I have made a change here, it should reflect instantly. Sometimes it reflects instantly, sometimes it doesn't. For instance, a few seconds ago, you saw it didn't change here. I still haven't made the necessary changes. Anyways, the support has been becoming bad. It looks that way at least. They just take the request, they just say will solve it. Unless it's urgent, they probably don't care, I think. Whatever the case is. If anyone at TradingView is listening, kindly take the matter to your higher authority. Anyways, coming back to the chart of S&P 500, we are assuming that this is the take. Let me just with the help of arrows here. And we are also assuming that once this is complete, we can then see further down move like this. So here's the take on S&P, and we'll call this A down, B up, and C down. Here's a comment from Joe. Yes, I have the same issue on TradingView. Takes time to update text box sometimes. Not sometimes, it's almost every other time for the first attempt. If you do the same thing just after doing it once, it does do it quickly, as we just saw. I even recorded a video to explain the problem, but after all that the time, they just said they will resolve it and didn't even give me an estimated time. And it has been months, literally. That's how they treat their paid customers these days. Anyways, here's the count for S&P 500. We are assuming that if this is an ABC structure, then we can see one leg down correction and then another leg down. So in either case, it's a scalp short below, what is this, 6220. I'm not very keen on scalps at this point in time, but once we see the fifth is complete, I'll wait for this correction and then look for shorts again. So here the setup will be that once this B is complete, we'll look for shorting below this level, whatever this is, below 6200, whatever this level is, because we still haven't seen the completion of this level, so we'll have to wait and watch for it. So wait and watch on S&P with the short bias, both for the swing as well as the scalps. Only time we'll be cautious as to the fact that we may be wrong is if the market goes above 6300. Nothing much to add here. If you guys have any doubts or questions, just let me know in the live chat right now. If not, we'll just move over to the last chart of Bitcoin. I am in a sort of a hurry today, actually. So just let me know quickly. If there are no doubts or questions, just type in clear understood or something like that and we'll move on. Anyways. H1 S2 both are bearish. Scalp swing both we are considering bearish possibilities. There's a comment from Joe again. Once the fifth wave is over, take a long for wave B would be a bad idea. It's a counter trend trade if this count is correct. So it's not a bad idea. You just have to be very sharp about it and should have a very clear analysis or picture in mind as to what you are doing. All right. So it's not a bad idea at all. It's just it is doable and I generally do it as well, but you have to be a little bit cautious on counter trend trades. That's all. It's a good setup as such so far. Raghu is saying clear. So with that being said, let's now head over to the last chart and not waste any further time. On screen is the chart of BTC from our last discussion of the public webinar, which was on the 18th of July. Again, for those of you watching it now, you do keep in mind the last webinar is for every month is conducted privately. So 25th July webinar was private for our Slack group members. If you want details on how to join it, you can find them in the contact us page. Just select requesting details for Slack private group and you will get the email. If you don't get the email, do keep in mind I always revert back to the emails. You just have to check it in the updates, promotions, or maybe even spam. Who knows how Google works if you are using Gmail. Whatever. So here's the chart of BTC from our last discussion. We are assuming that wave 3 CR is complete and wave 4 CIR or circle is in play. Pullback is expected, then the market can continue its upward trajectory is the expected way. So 117702 expecting bearish movement after that. Let's see if something else is said. So 117700, let's just call it. So bearish movement expected. And there's a BTC live chart on screen. 18th July, 18th July, 18th July. Where is 18th July? 18th July is here and the market has gone down as you can see here. So again, went down as per expected. So this is again a +1. So we have 3 trade setups which played out precisely. Gold went down after going up a little bit, took the resistance at the trend line or the channel line. S&P went up precisely as per analysis. BTC has went down precisely as per analysis. Crude oil also is playing out fine, but it is sideways. It can be considered a +1 if you are selling options as per that analysis. But then again, I won't be counting it. It's not the kind of play everyone can make. So anyways, here's the chart of BTC. Now let's see the updated view. We are assuming that it is now forming a series of nested impulse. And let's just call out the point of reference first. Here is the point of reference, price level 105 to 12. And since then, we are assuming it's a wave 1 up, wave 2 down, and another wave 1 followed by wave 2 in play. So nested impulse basically means we are seeing a series of 1, 2, 1, 2, and strong bullish movement can still be seen. Here, the thing is that the support is a huge zone. I can say between 114266, 111998. So somewhere between this range, we can say that wave 2 may complete its trajectory to the downside. It can go further lower as well, but that's just the general gist of it or the general support region. As such, we are not very keen on adding anything to the upside unless we see a move below 118556 plus. So this is not a long setup. Above this, we are looking for longs. Maybe perhaps minor longs can be added here. And further more longs can be added above 120708. So that's the setup here. Bullishness is expected to continue as per this count, and the stop loss for this whole setup is 107532. Again, pretty wide stop. Let's just call it around here 107500. So this is the whole setup. As you guys know, I'm not very keen on taking trades on this counter in general. But if you are taking trades here, it is following the counts rather well as of now, at least. So just follow it like such. So that was the chart of BTC. That concludes all our discussions. Let me know if you guys have doubts or questions on the chart of BTC. And as I said, I am in a bit of a hurry. Just be quick. If you don't have any questions, just type in understood or clear. We do have some audience still left. So again, I forgot to say, our views on the webinars have declined considerably. Exceptionally low views on the last webinar. So if you are enjoying the content, make sure you share it if you want to see more of it. And of course, thank you for staying till the end, those who did. And such NVIDIA results 27th. Hopefully, wave 5 circles would be in play. Let me just have a very quick look at NVIDIA. It has so far played out as expected. Let's see what's the take at this point in time. We had covered this chart last time as well, so we can just refer back to our past analysis at once. So NVIDIA, we were expecting pullback and then up leg. So it has given the expected pullback, went down as per analysis, broke the trend line and is inside a correction. So these arrows are playing out. The trend line setup has played out. So now this brings us to the very important question: till how far are we expecting this? So we are expecting it here and here. So basically, somewhere around this range, we can expect that this market will take support. It can take support above that as well. That is, of course, possible as such. But for us right now, it does look like this market is going to possibly go till 163 maybe, or maybe even 149.61. So around there or above these levels, this market can take support. And conservative setup is very simple here. Long above. Look for long above 181.65. This is very conservative here. Do keep in mind, as such, we would want to go long around these support regions, one of these support regions. So what we'll do is we can place an alert around the support regions, and if the market does go there, indeed, we can look if we are seeing a possible reversal. If we are seeing a possible reversal, then we can look for considering possible buying. That is partial buying. If we are going in with the 1,000 shares, let's assume, then we can go in with 300 maybe over here, and then perhaps more over here. That's how we can expect this thing to play out. So that brings our tally of trades discussed in the last public webinar, which I played out to 4, including the gold, S&P, BTC, and NVIDIA. And that also brings this webinar to an end. Hopefully there are no further doubts or questions, and hopefully I have answered your question properly, Raghu. Thank you so much, Neera, for your analysis. Rest well during your weekend. You too, Joe. And of course, let me know, guys, if you have any further doubts or questions very quickly. If not, we'll just put an end to this webinar. Thank you to those who stayed till the end. And of course, do make sure to share the content. And of course, if you want details on the private Slack group, check the comment section of YouTube. If you are on LinkedIn, check the comment section on LinkedIn. Nothing else to add here. I have updated NVIDIA as well in the private Slack group. So anyways, all right, I have to leave now. All clear. Thank you, Niro. Oh, very welcome, Raghu. And yes, thank you guys to those who stayed till the end, and to those who do continuously share my content. That does help a lot. See you guys in the next one. Take care and bye for now.